Hey everyone, Les here from BG Trading. Hope you are well. Today is 6th of June 2022 and I'll be analyzing ZIP, which the SX code is ZIP. And I'm going to share my thoughts about the stock, answer some of the members asking us whether we believe the stock could reach $6 or $8 again. And what is our honest thoughts about the stock price for the next 6 and 12 months for ZIP. Just briefly, I believe we could double the money or even triple the money if we buy ZIP as we speak. But let's explore it in detail in this video, understand the risks and what will be the countermeasures that we need to use in case we get this wrong. Just want to remind you, this is not a financial advice. It's just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up target, stop losses, avoid FOMO and much more. All in this channel. So if you like, please share this video with someone that you believe that could be interested and help our community to grow. Also want to take the opportunity to invite you to become a member of our Facebook community called Buy, Grow, Sell Strategy for Share Traders. The link will be available at the description below. So take a look. We put a lot of great quality content, links for our stock analysis, which some of them are exclusive for our members. So you can have part of access to this. And also, we have our VIP membership program, which traders can buy the same stocks that we're buying, can make their own decisions, understand the fundamentals of the company. Obviously, this is a paid membership, but the whole idea of this BG trading concept is we can make money together with our VIP members, so we all win together and everyone becomes successful. So let's have a look. So let's jump straight using the chart so we can see this chart formation. First part of this video, I'm going to be talking about the importance of using stop loss. So what we did back in 2020 and 2021 and why ZIP was for us one of the greatest trading stocks ever at BG Trading. So let's take a look at those share price swings. So first of all, we identified the stock behavior was very favorable with swings of 60%. There's another swing here of 33, above 36%. And then this is massive swing here of 170%. Only in this 170%, we took 160% profit. We locked it in. One of our best trading positions ever. So 38%. So by applying BGS20 strategies that we focus into locking 20 to 40% profits, and then also shifting by to BG trading strategy, which we aim to sell the stock at the maximum profits. So we managed to accrue itself, accrued along of all those trades over 200%. Right, so that's what we did, and then obviously in the last two trades, we unfortunately identified, fortunately and unfortunately, the stocks ZIP and the all buy now pay later sector has changed its trading behavior, its movement behavior, and become into this massive downtrend. And we took stop loss, and our last trade we took a stop loss of $6. Now, why it was so important that we took the stop loss rather than just holding or averaging down? So we don't average it down. We don't hold stocks that are lost. So what we do is we basically, if we haven't sold at $6, that's $6 here, guys. So if you haven't sold at $6, we would be holding 87% down on our position. That is 87% down. So imagine you have been holding, unfortunately, a lot of people being caught out and still holding positions above like $8. So must have a strategy in place, must understand, must use stop losses, must assume this was wrong, and you need to assume the loss. Otherwise, it can be a massive, a much higher loss than you really anticipate. And then when ZIP turned into these green candles here, we decide we try it again. We tried again as a potential reversal. We bought around a low of $1.50, but again, we've been caught out in this bearish formation, and then we end up selling, closing our position around $1.50, 12% loss. But then again, this has protected us from a 45%, 46% further losses that we could have taken if we haven't sold the stock. So stop loss extremely important. Now that we are going to be buying a ZIP, we actually bought ZIP again. We have done the stop loss, another stop loss again in case this thing doesn't turn up, which could happen again. But I'm going to exploit in the next chapter why we are believing to see some value in this stock. ZIP hasn't been following much of technical analysis indicators anyway. So from the technical aspect of ZIP, it's now trading 94% below the all-time high, which, by the way, was a inflated stage of the stock. So if you see the pink line SMA 250. According to our over 12 years experience, we use 250 moving average to identify long-term trends and whether the stock is technically discounted or fair price over the long term as well. As you can see here, when ZIP reached its all-time high, it was trading 170%. Sorry, not 170%. It was trading about 150% above the SMA 250, the pink line, not to mention the SMA 40, but it's still FOMO area there. Now, it's technically in FOMO area, not just in the short term, but in the long term as well. So what we did here now, we have exactly the same situation, a pretty similar situation, where ZIP is trading now the opposite side. It's trading 84% below the technically fair price. And if you see the consensus from prices from the analysts, you can see all sort of target price for ZIP, but I've seen most of the analysts tipping ZIP fundamental value between $3 and $4, which is not far from our SMA technically fair value of for the long term for ZIP of $4, currently sitting at $4.58. That would be our technically long term fair value for ZIP, and it is trading on the opposite side. So what we do here is we have most likely saturation of sellers here, and then the market will find value. And then sooner or later, this value will reflect into the stock price, right? So now, from the technical perspective as well, I'm pretty confident that we could see this could be at around 77 cents, which is trading as we speak. We could easily see a doubling in the medium term. So talk about over 100%, even tripling potentially. To triple the position, ZIP would have to reach over $2, $2.29. So I would be very comfortable to say that we could double the money in the short term. Short term now, medium term, but not quite sure about 200%. Although it's more likely now the stock price will try reach the SMA 250 over the medium and long term as well. If it reaches again, we might meet at $3, and then we more than triple the position the initial position if buying ZIP now. But before getting too excited, you gotta understand that again, this is a very high risk trade, and we failed last couple of times. Although we did absolutely fantastic in 2020 and 2021. So we failed because we're trying to pick a downtrend here. But we did succeed in many other positions picking up bottom. So again, like there's no guarantee in the market either way, even if you buy in the uptrend. So what I would suggest here is if let's say anyone that wants to do this trade as well, just to put a stop loss. Stop loss is a key element, key tool to protect capital. And I would set stop loss right here under 70 cents. Right here under 70 cents, because if it goes below 70 cents, I'm very confident that ZIP could reach 50 cents. And if it hits 50 cents, then we'll be looking at a further 25% loss. So we don't want to have 25% loss, right? We want to be protected. But now let's talk about fundamental. What are the key facts? Now, what are the key facts that has been putting a lot of investors away of this stock? And then I'm just going to be talking about the facts, and I'm going to give my opinion about those facts afterwards as well. So now the first key fact is that tech stocks sell the sale of tech stocks in the US, and they're also obviously all buy now pay later companies. Although they actually financial providers, they are a part of the tech sector, somehow considered to be tech stocks. And then investors simply look at all the tech stocks and pour money out, put in materials, resources, and EV, anything else but tech stocks. And they've been selling like crazy. But this is a market sentiment fact that has damaged the stock price for all those buy now pay later companies. Now, from the macro perspective, we have post-COVID situation where government has inflated the economy with so much money. ZIP made a lot of money. The shareholders made a lot of money throughout the golden times when a lot of quantitative easing, also decline of interest rates, and now we're seeing the opposite. But most of this has been already priced in. We're talking about 94% fall from all-time high and 84% fall from what is the technically fair value. I'm not going to even talk about the all-time high now, because this wasn't real. This was market overexcited. What I'm talking about now, our reference is SMA 250, which is the technically fair price for ZIP, and we are trading at the 83% below the technically fair price. If to meet back, we'll be doing at least 500%, but then by the time those two lines join, I would say $3 will be comfortable to say that the technically fair price within the 6 months will be around $3, and then we talk about 300% out of this stock if the market sentiment shifts back to tech stocks based on fundamental technically value, which sooner or later will happen. Sooner or later, that always happen. Investors find value, want to find stocks and sectors that offer great value again. Now, from the fundamental aspects of the company of ZIP, we have a increase of bad debts, undisclosed information that made a lot of a lot of retail investors uneasy, like ourselves. When the financial reports doesn't exclusively disclose the margin per transaction, which is one of the key elements that we want to analyze. They only disclose the bad debt increases in some of the countries and not in all of the countries, which also make it inconsistent. And I think this is one of the key facts that people are kind of a little bit skeptical about Zip. Uh, the management is being a little bit cloudy on disclosing all the information. And then, and lastly, for me, one of the worst things is the fact that companies in some countries they're generating negative cash flow, which is pretty bad. Negative cash flow is something that you don't want in a business. But then this whole scenario is also linked to the fact that the company has been trying to expand aggressively in not an organic way. Most of the growth is inorganic, which is fine. I've seen many companies increase by acquisition, but the marketing to manage this acquisition, it's extremely high. Mostly a one-off marketing, but if you keep doing acquisitions, this is no longer become a one-off. It become a part of your payroll, right? So that's why we really wanted to see Zip now in order to succeed. We want to see Zip constrain these costs, and obviously we see a lot of lay down on overheads recently in the US, in Australia. The company wasn't specific talking about the percentage of the layoff, or the positions that that has been dismissed, but this is all going to influence the business trying to find ways to get margin back into the business, right? So competition is high as well, and then obviously these all red flags that has been putting investors away of this particular sector in general. So, guys, this is the fundamental aspect. Quite a few red flags, but they're all priced in, to be honest. And then now, as a green tick here, as a potential positive outcome is that the next financial reports, these next quarters, incoming quarters, the company, the management now is under pressure from shareholders to start providing value to shareholders. And this is a key player that I've seen in the past in different companies, especially this type of growth businesses. And the manager will have to start providing value to shareholders because the stock price has been hit very, very hard. What we could see is a slowdown of acquisitions. We are already seeing cost of capital and also reduction of operational cost. And what we want to see is some positive numbers on EBITDA coming through, at least for these next few quarters, which will give customers, retail investors, confidence that the company is kind of turning around its pre-successor reports. That's what we want to see. Overall, my overall feeling of Zip is that is now at interesting buy. You don't want to buy when it's high, when everyone is excited, but we want to buy when it's really low and nobody's excited. And I think there's a lot of short traders. I think now there's about over 8% is short positions in this stock. And I believe if these guys get out, we can see a massive pullbacks on the stock. I've said that in a previous video, it didn't happen. But the more the company, the stock price deteriorates, the danger it's become for short traders. And more likely we will see they coming out of the stock sooner or later. Okay, this is my position for Zip. Hope you enjoyed. Please put your comments below. I don't think I'm going to go back to $8, to be honest, $6. I'm confident to set up a strategy trading now and lock in 100% profit, but I don't think we're going to see going back to $8 from now. We're talking about a massive rebound of 800%. Honestly, I don't think that will happen in Zip. So I don't want to be putting a cold water bucket in your face, but I don't think that's going to happen soon or even ever for Zip at this stage. Some just to finalize, some positive facts I want to pinpoint is that Zip has a massive database of customers. This is a very valuable information for any business that want to do a synergy like Afterpay and Square did. We could see potentially a bank or any other company coming up and trying to take advantage of this database as a takeover Zip to become a takeover target. Furthermore, these companies tend to do really well in a recession times, and we might see recession. 70% of analysts in US are tipping a recession in US, and then that would trigger a worldwide recession. And Zip as a worldwide player, we could benefit, not just Zip, but most of the buy now pay later sentiment could become favorable for investor coming back, and then we might see some very compelling rebound in this space if that happens. So perhaps recession is not too bad for those stocks. That's my thoughts. Let me know what you think. I'll see you in the next video, and sorry to be a 20 minutes plus video. Thank you. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.